All right, ladies and gentlemen, I hope you had a wonderful day. I got another watch list for you. And after today, we now know what will bring the stock market down. We were talking about it yesterday and bringing up the reasons as to why it wasn't going down and explaining how the data was feeding into this whole no landing phenomena. But after today, there was a bunch of data right here. You had PPI, jobless claims, the Philly Fed, and a bunch of other things. But shortly thereafter, you had one event right here and then another event later in the day that really led us to sell off. And even right now, the futures just opened up and they are starting to go lower. And the reason is, it is the Fed futures. So we've brought this up a ton, but I'm going to go over everything and I'm going to give you some pretty pictures. But quite simply, there was one event here. It was based on what we heard from Loretta Mester and James Bullard, but both of them brought up this concept of wanting to do 50 basis points at the last meeting and now saying they wouldn't mind supporting it at the next one. Now, granted, they are not voters, but the whole thing that happened today is that this odds or the chances of a 50 basis point rate hike, it came out of the grave. Now, granted, it's only 15% right now, but it's looking like if this story develops, this will be what will bring us down. Other than that, though, if this doesn't happen, oh man, you're still going to be able to stay up. And that's what we learned today. After all of the data, you had very hot PPI data. Here is the chart on the year over the year. It still came down, and that's a positive sign. But inflation, again, another inflation indicator, it did not come down as fast as people were expecting. And then if you look at it on a month-over-month basis, this was actually the biggest jump in month-over-month, I believe, since 2020 or even like June 2021 or something like that. But someone's going to have to double-check that. The point is, you haven't even seen a month-over-month increase in PPI like this in a very long time. And like I was telling you, this factors into the PCE. Producer prices, personal consumption, they go hand in hand. So not only did you get that, as far as the whole no landing camp, well, this made things a little bit more worse because the Philadelphia Fed cratered out of nowhere. Remember, we were talking about economic data getting better while inflation goes down. Well, today, your inflation indicators went up more than expected, and now your economic data, it cratered more than expected. But guess what? What happened? You opened up the day near the lows of the last couple of days, and that's something to keep in mind. We have really been range-bound, but this is where you were at right at the bell. You were at the lows of the day before, just under it, and then the day before that, the bell rang. We spent all day and you rocketed right back up, getting back up to your close just like we did every other day. But then an hour, like 5 minutes into power hour, James Bullard, he pretty much said the same thing as Loretta Mester, but he said it to reporters after his speech. We listened to his whole speech. It was right here. Nothing happened. Then afterwards, his comments proceeded to hit the market, and it finally started to move the Fed futures. And like I'm saying, that is going to be the next thing because, quite frankly, everybody has kept that out of their minds, thinking that 25 basis points is going to pretty much be a lock. So it's going to be wild tomorrow. We have a little bit of data. You have the leading index in the morning, or I think it's going to come out around like 10 a.m. or so. But the leading index, it's pretty much the average or 10 components from average weekly earnings to the number of initial applicants, manufacturer new orders, the speed of deliveries, building permits. It's taking all of these indicators to give you an idea about the economy. That can move things, and then on top of it, you are going to be getting a giant expiration for options, and a lot of people have been bringing that up, but it's looking like these Fed futures and the rate hike odds of March, that very well may be the next important thing. So, Chad, I hope you're ready. I got the plays for you. We made a couple of plays today. I got the recap for what happened and what we're getting in tomorrow, and that's it. It's going to be a good one. So hopefully you like the video. Hopefully you make sure you're subscribed here too. If you don't know, we do this every single night. It's all free 99, and we're going to be up in the morning. We do all the day, every single day, minute by minute. You can watch it live, youtube.com/thestockmarket. We love you. Let's get it popping and run it, baby. Yeah.
Walking to the couch, it's a joint on the legs. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson. I just want protection. protection. I'm up and I'm down, but the sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
But right off the bat, I already gave it away to you, man. I'm telling you, this 50 basis point rate hike being priced in, this is the only thing that could bring the bulls down at this point. Now, even though it was a nasty sell-off, I'm telling you, it was about, I think, 30 or 40 SPX points within 30 minutes. And people on the chat, they were asking me, they're like, you sound really calm. It's because I respect the bulls, and the fact is the odds right now are only 15%. This could quickly dissipate, and people can quickly put this in the rearview mirror, but it's looking like the seed has been planted, and that is where I'm looking at it, where it's like, hey, that's the only thing that's going to shock the market, because even the PPI data today, even the jobs report, and take every single data set over the last couple of weeks, they have not been able to stop the market from going up. They have not even been able to make the market catch up with the bonds. It's only been a couple of days like we talked about yesterday, but hopefully you see what I'm saying now. This seems to be the thing that is not priced in, because I think a lot of people put it in the back of their mind that 50 basis points would even happen. So hopefully you see what I'm saying. You can monitor this. This is the Zaza, the /ZQ. It's ZQH23, or you could go to investing.com. It's called the Fed Rate Monitor Tool. That's the one where it shows you like the probability and percentage, but it's quite simple. If data, Fed speakers, anything of that nature moves it, this is going to be the main key. Now, coming into why we had that last-minute sell-off, and so you could understand it a little bit more here, Mester and Bullard, they both said the same thing. So, like I'm telling you, right here in the morning, this was Loretta Mester. She said she would do 50 basis points. She wanted to, and she's open to it. And why this is so weird, because nobody on the Fed has ever said that. Any of the last couple of Fed meetings, everybody, there has been no dissents. I think Mester was a prior dissenter earlier or later last year, but so far it seems like everybody's been on the page with everything they've been saying. So this new idea of this, it kind of came out of nowhere, and then Bullard said the exact same thing, but guess what? Both of them aren't voters. So none of them have, whatever they're saying now, they are not the people who are voting on the dot plot. They are not the people who are deciding what is going to happen. So that's how people are going to try to maybe bounce off this and say, well, we have to get everybody else. And that's something I want you to look at, because there's two ways to look at it. It's one, their comments can still give you an idea of how the Fed is thinking about things, and maybe this could be the start of it. But two, you kind of need everybody on the Fed, especially the voters, to start echoing this so that it actually takes hold, or you need the data to really, really get bad to that point, and enough people on the Fed saying this so that the Fed futures, they start pricing in, and maybe the Fed futures is what the markets are going to respond to, because as of now, the Fed futures have just gotten away from a rate cut, and now the next step would be going towards higher and bigger rates than people have been expecting for the last 3 months. If you remember, it was since like what, September, October, we started stepping down. We went from 75 to 50, then 50 to 25. Really, a lot of people have not even thought about this idea of going back up to 50, and even where the terminal rate is at now, sadly, and that's what makes this a little bit more uncertain. If the Fed did 50, it would still fall in line with this whole 75 basis points since the end of last year up until March, or even till June. So hopefully you see what I'm saying. The idea right now, it's just the seed. It's still pretty premature, but the idea is here, if this starts to develop and the data or the Fed speakers support it, especially the Fed people who matter, then this is going to get a little bit crazy here. So that is key number 2. And then finally, key number 3, like I'm saying here, the leading index is coming out tomorrow. It may cause a big reaction, and this is going to kind of be our first test of, okay, well, depending on the data, is that really going to move the Fed futures and keep them in a direction that makes people react? But like I'm telling you, after everything we have seen all day today, it seems like those rate hike odds increasing, that's going to be the only thing that can spook this rally. But taking it all in all, I've been standing by what I've been saying the last couple of weeks here. I think we are going to be in Chop City. If anything, even the PPI today, what's happening is that the bull's armor is getting scuffed. Every single time we get one of these gap downs and then it comes up but not as high, and we play this game a little bit, like I'm saying, I think the upside is limited. However, it's not going to be just one event or one comment that is going to make everybody tumble and bring you back down below 400, 4,000 and back into the 380s of death and destruction. So hopefully that makes sense. Either way, we're going to close up this week. Next week, we get the minutes, and I'm sure we're going to see where things run from here. And then you're wrapping up earnings, ladies and gentlemen, so that will also bring about its own change. So I hope you're ready, but let us get into the plays. So right off the bat, I got a couple of different plays out here. I'm going to start with the really good earnings one. Some of the chats told me to bring this one up. They're like, what happened with Suave? Suave, it's called Shockwave, and hopefully your chiropractor does not use this. Okay, that would be very weird, but they had really good earnings. I liked it. I don't think there's a lot of eyes on it. It's a higher price stock. They have moved a lot, and that's the risk. It's kind of a medical device company, and it was at $50 a year or two ago, and now it's in the high 200s. End of last year, it was at like $300. I don't think too many people know about this because I barely know about it, and I just like the earnings. It was like killer earnings. Their EPS was like $3 above expectation. Their revenue came in good. They kept their guidance. Just nothing about it seemed bad, and even if you look at the daily chart for them over the last couple of days, it's not like they moved a lot to start off the year. So a lot of healthcare companies and medical devices have been down. I think it's a great value with a lot of upside, but also, too, there is a decent amount of downside, and they're pretty much where they started 2022 at. So they could even drop like 70 or so bucks or something like that. But I grabbed 25 shares, I believe, at like 194 or something like that. Let's see, where was it? Yeah, we got it at 196 and 195.50. So 25 shares, a majority was at 195.50. I think we're already up a decent amount there. So it's like $5 to $8 a share. Pretty good, but I like that coming into tomorrow, and I definitely want to see how that one continues. But that is play number one, and then play number two, Manchester United, MANU. If you've probably heard about this, we were seeing this from day one. I mean, I passed up on it, or I flipped it for very, very small gains at the beginning of the whole buyout saga, but there was news today that they got a new $5 billion initial offer by Qatar. Right now, their market cap is about like $4 billion or so. So there's a little bit of upside. The good point is that this is the starting point of the offer, so maybe it goes higher, but I'm just liking the decent risk to reward. I'm already up 6% from when we got this news and the confirmation today, but the way I'm looking at it, I got it around like $21 or something like that. No, I didn't get it. I got it at 25. I'm really off on my prices here today, but if it goes down to 20 on 100 shares, it really hasn't dropped below 20 in a while here since the news, even since like October of last year. So I think it's a good risk to reward. I think you could squeeze out maybe 10, 20%. If the offer gets crazy, other people want it, then it goes a little bit higher. So I'm just liking the risk to reward, and even when we were selling off today, it found a way to hold up there. So I really, really like that. But that is play number two, and then finally, play number three, baby. NSC, Norfolk Southern. Come on, Ohio. Shout out to Ohio. The situation out there is crazy, and NSC hasn't really dropped that much. It's a slow mover, and it's down a decent amount. It's not like NSC had a bunch of premium even when stocks were doing good, but the news in Ohio is getting worse. The White House said they're going to make them pay and hold them accountable, and just simply out of principle, I thought I'd go with the short. So it's still an expensive stock. I took 25 shares short there near the bottom. I'm going to go get you the price before I mess this one up here again, too. Where was it? I shorted it at 233.10. Again, I got like $3-4 a share already off of that, but I would be down to add to it. I want to see how it ends up playing out, but like I'm saying here, they got a bunch of news going on. You've been getting train derailments left and right. I think it's going to be risky because it's not the first time we've seen companies kind of brush off really big news or any sort of liability like that. Usually the damage comes a lot later, so that's going to be the only risk with it. But like I said, out of principle, we going to see what happens. But those are the main plays. As far as everything else, I added more to the EBS. That's the Narcan drug from yesterday that got approval, so I liked it. Still holding that one. I think I'm down there, though. I have 100 shares. I think I'm down $1.50 a share now. Going to be riding that one out for a little bit. I sold out of the Twilio. Got like 280 or 290 net on that one, so I bought in high, ended up selling it higher there. That worked. Their earnings were good. They were a leader all day. I think even after the sell-off, they held up. Then the NSC, and then I tried to make a flip on Redfin. Ended up taking about a $150 loss by the end of the day, going for the end of the day run up there, hoping we would get it. I had $150, then the Bullard thing happened, and then everything came down, but still holding in the long term, but didn't want to trade it. Beyond that, then we grabbed the Manu, then there's the Shockwave, and then after hours, I added 25 shares of DoorDash at $69.95. Kept it a little bit smaller, but I like their earnings. I like the fact that they gave guidance, even though their EPS and other things weren't there. They said they're taking market share, but overall, we've seen DoorDash hold up, so it shot up 10-12%. I waited up till here at like 69 bucks to buy it. Came up a little bit. I think it'll be an interesting one, and playing with the small share amount, that one should be good. So those are the main plays. As far as everything else now, I don't even have it all up here. So please hold. I'm going to enter them in, and then we're going to cut to it. Commercial break. Please like the video. We love you. Would you like your license plate holder? Okay, hold on. All right, so here it is. We got a couple more, but the NASDAQ came down a decent amount. You've been seeing how it's been fluctuating lately and playing that back and forth there. But like I said, holding until March now, especially if some of this stuff starts kicking off. The bonds, I'm going to have to close this out. Pretty much you have to either close it out in the next couple of days, or they could close you out at any time. The contract is about to roll over, and they sent me an email. They said it's deliverable, so I don't want to end up holding the bonds there. So we're going to see, but then our plan is close out of these, reset, and buy some new ones. The ACAM went down today. It was looking a little good in the morning, but that flipped, so now we're down $2 a share. And people were asking me today, what do I believe with this? I think it's just a great value as far as any of the tech. They did good on earnings, and the first time I bought this in the higher $80, we sold out around like, I think it was like 80 bucks or 79 to like 87 or 93. We made a decent amount. I had a way bigger position, but I think it has some upside. Otherwise, it remains relatively stable, but I think there's like a secondary buyout news, but I plan to swing this one for a little bit, and doing it with smaller size, it's definitely going to be a lot more comfortable. So really, really like that one. There's the Amazon. They came back down again. Even Google. Remember, Amazon's moving more. Amazon's even moving after hours, but these are all doing good here. The BABA actually held up a lot better, and then the bank stocks. I'm still down on the Bank of America, but the Citi is up, and I'm still just liking that. Again, higher rates. I want to be holding those banks. And then Uber, it was positive for a little bit, and then any of the shares we had that were positive, they all just got clapped here. And then, like I'm saying now, even with the futures, it looks like we're going to get off to a weird start, but overall, nothing really changed. I just added those plays here today. Even some of the plays that I added yesterday, like I'm saying, I've been flipping some of them, but I think what you're seeing there, I'm going to want to try to swing until we start closing the bigger plays in mass, a.k.a. the NQ, the bonds, and everything else, and then go from there. So I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure Hydrate Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, baby, you got to move with intention. No such thing as drifting. Drifting is how you fall away, so make sure you don't drift. Stay focused day by day. You got to go through the game. Sometimes it's good, sometimes it's bad. Sometimes it feels happy, exciting, easy, fast. No, sometimes it's slow. You got to make it through. You've already had training to make it through the journey. I need you ready and focus on not drifting, and get ready, baby. It's still just the beginning. So, Chad, I hope you're ready. I hope you know you're blessed. Thank you guys for everything. I love you all. Drink that water. Stay hydrated, healthy. You know what to do. And I'll see you bright and early in the morning, baby. It's Friday. Horn.